Hey, good morning, everyone, or good afternoon, everyone. Today, the 4th of May, as we prepare or as we start our easing the lockdown situation in Lagos, Abuja, and Ogun State, and as well as in other parts of the country as well. Welcome to today's edition of Blue Talks. Today, we have Olu Delano here, who will be having conversations with certain sector heads from Stanbic IBTC. We're looking at the impact of COVID-19 on key focus sectors. The first sector will be the consumer sector, and the second sector will be the power and infrastructure sector. The guests will be coming along, will be joining Olu in having those conversations momentarily. Good morning, Olu. Thanks for joining us today.
Morning, Taiwo. Good to see you.
Yes, so what's the outlook like? What should we be expecting now that we've eased down the lockdown, the restrictions in movement and business in general?
Okay, thank you. Just want to give our audience the team that is speaking to them today within Stanbic IBTC. You pretty much in the bank, we have three primary business units. We have the personal and business banking that deals with personal accounts of individuals, as well as small to medium-sized companies. We have the wealth and investment group that deals with pension, asset management, and trustee. And then we have the corporate and investment banking team. The corporate and investment banking team, they manage clients, which are usually large local corporates, regional corporates, as well as global multinationals. Just give a sense of the size of the business. So companies that generate about 10 billion naira, $20 million size and upwards. So we got a company that could be as high as $1 trillion or 2.5 billion naira revenue. So the team that engages that, we have which is in client coverage. We are called the client coverage team. And we are the team that engages the customer, understand their business, their strategy, short, medium, and long term, and come back to the bank to have a good sense of how to engage with them and provide solutions. Because of the nature of those clients, we group these clients into sectors, and we have 6 core sector groups within Stanbic IBTC, and I'll run them very quickly. One is consumer sector. The second is conglomerate and industrial, oil and gas, telecom, media and technology, power and infrastructure, and the last but not the least, financial institutions. And what we have is we have a group of professional relationship managers with, in terms of range of experience, as high as 30, 35 years, all the way to analysts that just graduated through our management program in the last 12 months. So the team are the ones that actually engage the customer, understand what they're trying to achieve, and then we bring solutions to them by engaging the product houses in corporate and investment banking, which is transaction products and services, which talks to collections, payments, and trade transactions. Investment banking that talks to long-term funding, debt and equity capital markets, as well as global markets that talks to foreign exchange solutions. Now, what I've just explained is while we have the corporate and investment banking engagements, we still look at the overall universal financial service to the client. So we will still bring the entire solution to the client, pulling in our wealth and investment team, as well as our personal and business banking to actually deliver solution to the client's ecosystem. So why are we here? Well, in the last couple of weeks, literally, we all celebrated, 3 months ago, we celebrated Welcome to 2020. And we discovered this COVID-19 event just a couple of months ago. And in Nigeria, we tested the positive test of the first COVID patient was February 27th. And today, as we've just mentioned, is May 4th. And we've got just over 2,500 positive individuals who are tested positive for COVID-19. We've got a number of recoveries, and unfortunately there's some deaths. In that period, over the last 4 weeks, we've had the government declare a lockdown just to make sure that the virus doesn't spread around the country. So in the last 4 weeks, we've been on lockdown, whereby we've all been working from home and make sure that we're keeping safe. And in that period, companies have been having various engagements, trying to bring in their staff to work from home and adjust. So what we want to discuss today is bringing in two sectors of the 6 I mentioned. One is consumer sector, and the other will be power and infrastructure. Within the consumer sector, so I'll pull in Nnenna. So Nnenna Okoro. Nnenna runs our consumer sector for the bank. And hi, Nnenna.
Hi, Olu. Good morning.
Okay. Trust you're keeping safe. So your team, you guys have been, you manage and you speak to global and local CEOs throughout the course of the last couple of weeks. What have you been hearing from them in terms of engagement?
Okay. Thanks, Olu. Yes, we're keeping safe and healthy. For consumer sector, I just like to, for the audience, consists of consumer packaged goods, agribusiness, and retail. And here, that's where we have our multinationals, who are largely long-term players. These global multinationals are committed to Nigeria, and you find that most of them are, backward integrating to demonstrate their commitment to the country. In the last couple of days or weeks, rather, it started with a bit of a panic, from on the ultimate consumer side. There was a bit of panic trying to make sure that there's wholesale buying and picking up all the essentials required. And for our corporates, it was more managing their risk. So we saw that immediately, we were all able to distinguish between essentials and non-essential products. And this was all up on even for the government. That's also part of what defined the lockdown. So the pandemic affected the sector significantly, along non-essential products such as alcoholic beverages, with the lockdowns, social entertainment and hospitality business, which mainly drives the alcoholic beverage consumption, was inactive. And then also in terms of distribution, there were disruptions to the value chain. But we found that despite all of that, there was increased sales from our clients, especially for the essential goods. As we go along, the presentation, I'll give you additional details into how our clients were impacted. Thanks, Olu.
Okay, thanks, Nnenna. I mean, if you look at just the way consumer spending has evolved, and I'll use yourself and myself as an example. Nannies are no longer at home, and in my case, I find myself actually cooking now, cooking for myself. So the spending where I will have spent, getting the caterer to deliver cleaners for the house and co. How would you see that panning out now? If we look at our consumer spending pattern within the last 4 weeks, any thoughts around that?
Yes, in fact, consumers are, especially in Nigeria, quite resilient. Besides determining these essentials from non-essentials, there was a lot of discretionary spending that started happening, and then you find also that most clients were able to adapt. Consumers were able to adapt, and also clients were able to adapt to the situation. In some cases, in factories had to keep running, and we had clients who had residential facilities for their staff in their factories to make sure that the goods were constantly being produced and pushed out, given the increase in sales as a result of the panic buying, and then the international organizations and government trying to feed Nigerians as well. So we could see the resilience there. And it's also, important to note that as they are trying to cater to sales internally, they're also worrying about risk management in terms of their financials and, trying to shore up liquidity, trying to make sure that they're hedging contracts for any FX obligations or exposures that are due. So I would say the theme here is resilience and adaptation, really.
Yeah. And I think, Nnenna, we've been on some of these calls together. And when we look at how the conversation has evolved in the last 4 weeks, what are your thoughts? I mean, I know that you just mentioned that they're shoring up liquidity, make sure that the team are safe, working from home, social distancing. But how have you seen that transition in the last couple of weeks? Both as you engage these corporate CEOs and FDs, both in Nigeria, which are the subsidiaries, and I know that we've been having conversations at the global headquarters as well.
Okay. Just to give you additional information, as I answer the question, I'll give you additional information into some of the themes that have come out of the disruption. There was, as we know, business lockdown in critical locations, countries, and cities, factory shutdowns, cost cutting, capex suspension, disruptions to logistics, and people were forced to work remotely, and most importantly, there were new routes to markets that were also discovered. As you know, the consumer sector depends on the informal market, to distribute goods. So meaning that any disruption to their ability to move interstate or international is critical and would impact our ability to get the goods from farm to fork. So so they had to adapt to new route to market. Also, in making sure that they show up liquidity, we as a bank had to, first of all, commit or show our support by, demonstrating that we had the risk appetite to take on requests from this sector. So we had increased working capital requirements. We had introduced new access to loans. Some clients had to go to the debt capital markets. Some needed term loans at this time. And you would think that is a time when banks will be pulling back. But for these global multinationals, we're keen to support them to demonstrate that we're committed to providing services to ensure that consumers had the essentials that was required.
Thanks, Nnenna. So we've now established the engagements, and I know that we have to. I mean, we're in front of our clients a number of times a week. But how have your team now adapted, working from home remotely? How have you adapted into engaging these clients and ensuring that we are understanding their pain points and bringing creative solutions to them over the last couple of weeks?
Okay, I think the most important thing that's come out of the whole discussion is the power of technology. So we've used technology like never before. I usually pride myself as one who really loves to do everything tech, but this has taken us to a different level. So we engage our clients constantly using Microsoft Teams, using Zoom, any channel. If they're available on Microsoft Teams, fine. Whatever they want, but we're constantly talking to them. We're on the phone when we have to be on the phone, and then of course making sure that the interactions are at both C-suite levels, which is strategic, and also the operational level. And despite all of these engagements, you have to also focus on their transactions. So make sure that transactions are ongoing. So we're constantly engaging our colleagues in the middle office and in the back office to make sure that these transactions are being pushed through, and our clients are using our own digital capabilities to send transactions to us. Because of course, there was no movement, so we couldn't have manual transactions being sent to the bank, and then also we had to, for cybersecurity reasons, make sure that whatever instructions we're getting, it's also authentic. Okay, so we really leveraged a lot on IT security this period to ensure that those engagements are authentic and safe. So really, technology has worked for us, and we'll continue to do that even post-COVID. I think everyone has seen that digitization is the way to go. And I'm so grateful that we had the infrastructure in place even before this started. So our clients have found them very useful. So
so I know that you'll be very happy with this because you are a technology champion of the team, and we're all now on Microsoft Teams and having team meetings, client meetings, both local and global engagements. And talking about digitization, I mean, look, how do you now see that evolving, especially with our customer, the customer engagement as well as their route to market? Any kind of thought around, where right now our customers are very sophisticated in the consumer world, but that route to market, any opportunities there that we should be thinking of and having those conversations with the client?
Okay. The key driver of any organization is actually, their ability to make their working capital cycle as effective as possible. And what we do best as a bank, as you know, is to inject digitization into all of those processes. So be it account payables, account receivables, they're being able to make payments using different platforms, or they're being able to receive payments. Even we actually also leverage industry solutions to make sure that end to end it's seamless banking with our clients. Okay, I always say it's best to get clients operationally dependent on the bank because it makes their processes very easy because they can easily move transactions from their ERP system straight to the bank. So we've been very good with the payables angle, where we have our banking online and many other channels. But where we're going now, both post-COVID, and in fact we're starting the test right away, is the account receivables. Our clients, like I said earlier, depend on the informal market. So they use the route to market hierarchy that includes key distributors and wholesalers and bulk breakers. So our ability to make cash seamless within that value chain is really what we're focusing on now. So they will be able to make payments using a system that we're going to launch very soon, and then they're able to also pay the brands using this system. So they receive payments, they make payments to the brands, they're able to manage it has the supplier management platform as well, their rewards on the platform. And this is really what we've been waiting for to close the loop, digitization strategy for Stanbic IBTC.
Okay, so let's talk logistics a bit. I know that one of the challenges you've indicated was while the consumer sector clients, some are declared essentials, food, and the alcoholic companies were not declared essentials. But what we found on some of these calls we've been on is actually their ecosystem in terms of getting the sourcing and distribution of the products. And what are we hearing now from the client in terms of logistics? Are they now looking at, because typically our consumer clients have global type logistics solutions, but any thoughts around bringing that to more local distribution process and sourcing?
Okay. Thanks, Olu. Like I said earlier, the beauty of everything that's happened, despite the disruption and the badness that's come with it, is that it's made everyone more creative and more innovative. So you find that even within this period, clients who were not into online shopping and deliveries have started to do that, and trying to make sure that the downline, that's the end consumer, has access to their products, irrespective of what the middleman or middle hierarchy had to offer prior to now. So in terms of logistics, what I see is that I think the use of drones is going to become more important to us, especially in agribusiness. You're going to find that drones are able to look at the varieties of seedlings, are able to predict what which lands are should be cultivated, and the quality of products or produce coming out that is required as production input for the manufacturing companies. So I see that for logistics, there's going to be a lot of technology that's going to be used across all the subsectors. So like I said, for agribusiness, you see more of mechanized farming and use of drones as well. And then for retailers, you're going to see more robust platforms for ordering online, and the ability to also make sure that the deliveries are done in such a way that it minimizes cash in the entire process. And for consumer packaged goods companies, you're going to also see their logistics become more become more disrupted by the use of technology. And then you find that a lot of their fixed assets over time will not be required. And then what now happens is that you then find winners and losers, and then a lot of consolidation in the industry because technology has solved the problem.
Yeah, so Nnenna, I mean, you've just mentioned something that is dear to my heart, which is the consolidation. Are you now having the kind of conversations we're having with our clients? Is it touching now on M&A? I know the initial thought was, let's stop the bleeding, let's get our liquidity sorted out. But have you found now that there are more, as conversations, is it getting to that kind of M&A level now in terms of, where are the opportunities?
In fact, we've had more M&A conversations recently than ever before. The thing about having winners and losers is that you ultimately find that the big and strong companies will want to acquire the smaller ones. So I think one of the other things that we need to be mindful of is that post the recession we had a couple of years ago, consumer spending was really impacted, and it hasn't quite recovered. Even though there was a minimum wage, but catalyst didn't quite kick in before this pandemic happened. So clients were already moving away from premium brands to value brands. They were already downgrading. So some of those companies were already struggling. Some tried to introduce value brands, to see if they could meet up to the price points that consumers were now willing to pay. So what the pandemic has now done is to really then bring out the weakness we already had in the system. So that weakness in some of the companies, now seeing that some of their SKUs were not cannot survive this. They're now willing to listen to conversations. So we're seeing clients actually asking, for targets, for us to look out targets, for us to have conversations with bigger players if they're willing to consolidate. We're also seeing clients who are looking to stay strong using debt, but we also know that it will eventually be converted to equity. So there are a lot of strategic conversations going on, and it's what I know is that most of this is happening because there's a disruption, and then we then wonder what happens post-COVID. Who are what's the structure, or what's the new industry going to look like? When you've had all these consolidations and all these, injection of technology to disrupt business models. So it's interesting what's going on at C-suite level at the moment.
So one of the things, remember, Nnenna, one of the things I emphasize in the team is that cross-pollination between the sectors, and Folake will be coming on soon from that leads our power and infrastructure. What kind of discussions have we been having in terms of themes across sector that we can help knowing what we know and also where we see the post-COVID things coming through?
Yeah. Okay. Because business has been so disrupted, even though we have increased sales in essential goods, we still have non-essentials that are struggling. But the common theme across all of these clients is that they want to cut costs. So when you talk about cost cutting, it's beyond just reducing your marketing and advertising or your staff. You also need to look at other lines and see, okay, how efficient can I be? So it's about cost efficiency. So looking at that, power is usually significant. So you find that clients are going to be looking at renewable energy, trying to see how we can adopt more sustainable ways of running our factories and producing goods, and introducing sustainability management in throughout the entire value chain. So for my colleague, Folake, who heads power and infrastructure, we're already having conversations around renewable energy.
Good. I'm glad to hear that.
Yeah. What sort of ideas can we give our clients? And we'll also be looking at other areas from oil and gas in terms of the diesel they're using now. What are the other options? We'll also be looking at the technology and that's the TMT sector, technology, media, and telecommunications. Okay, now that they're going to be cutting marketing and advertising, what else can we do from a media perspective? In terms of telecoms, we're using so much data now with what has happened because we're all at home and working from home and engaging clients from home. Okay, what other packages can we offer to clients that can cut costs that they never, they literally took for granted before now? So this is really the time. And then, surprisingly, I'm also talking to financial institutions because you find that there's some development organizations who are willing to finance my value chain. That's the value chain of our clients, the key distributors, and then they're willing to take on certain risks. So there's a whole partnership going on, and it really is really exciting, especially for the tripartite ones that we're doing with FI. Yeah.
So there's a lot going on. Nnenna, well done to you and the team, just trying to manage this COVID lockdown situation, but we're still engaging clients. I know we're on calls daily, pulling 12-hour sessions, talking to both local subsidiaries and global clients as well. I'm going to pause a bit on your side and pull in Folake. Folake heads our power and infrastructure business within corporate and investment banking. Folake, are you on?
Yes, Olu, I'm on.
Hey, Folake, how you doing?
I'm fine, thank you, Olu.
Okay, so how do we define power and infrastructure within the bank? So I think you should just give the folks some kind of insight.
Okay, thank you very much, Olu, and good morning, everybody. I think it's important to also, Olu has given a background on what we do in client coverage and the 6 sectors that make up the client coverage team. I look after power and infrastructure. And under the power and infrastructure sector, we have, under power, we look after the generating companies, the grid, those that are supporting the grid, i.e. the generating companies, the discos or distribution companies, that is where are the value chain for the grid side, while we have the off-grid players. Under that value chain, you have the independent power producers, you have the captive power producers, you have the EPC, that's engineering, procurement, and contractors. You have those who provide accessories and also the original equipment manufacturers. All these are within the value chain of the power sector, and clients are segmented under client coverage. We support these clients are falling within our segments on client coverage. Under infrastructure, we look after the cement manufacturers and their original equipment manufacturers as well. We also support the construction industry, both indigenous and international, largely including the Chinese, who are the main players under this segment. And then we also look at the EPC contractors as well. Under logistics, the value chain across from the imports, i.e. when importation is done, the shipping companies, we look around those who support them in terms of warehousing and storage for our clients. And then we also look at the courier companies, i.e. those who move goods from the ports to the inland and the smaller ones within inter and intrastate. Under logistics as well, or infrastructure, we also have the ports, the port concessionaires, we have the road construction, which also falls within our construction companies. And then we also have those who play in the railroad sector. So those who build infrastructure and actually provide these services are the clients we look after under the power and infrastructure team.
Yeah, thanks, Folake. So if I look at, the P&I sector, they're mostly long-term. These are long gestation period for transactions to come through. So how have you seen the COVID-19 pandemic event affected clients in your sector over the last
Okay.
3 weeks or so?
Thanks, Olu. So I would first look at the fact that there are, it's a mixed bag. And the way I would like to dimension it, I'll look at the power sector as one. Under the power sector, this over the period of COVID-19 and the lockdown, this was largely an essential sector. Obviously, we need to have power, and the government recognized that it's a main economic driver. So it was one of the sectors that was classified as essential. Over the course of the period, the government also tried to support the players in the sector by providing a 200 billion sort of like a palliative to ensure that gas supply was maintained and to ensure that we got constant electricity. Although at some point in time, yes, we did have some challenges. The total supply generation went down, but that was because the funds weren't released on time. But eventually this happened and we were able to continue within the confines of what we have. We know the industry already has its challenges, but within the confines of the segment, we were able to, the players were able to continue to provide electricity. We experienced some demand shortages in terms of the corporates who are the large consumers. The large corporates were obviously not producing at capacity. So you saw quite a number of them shut down some of their plants, and then there was a drop in demand. But some of that drop in demand was transferred to the individuals and people like you and I who had to stay at home. And although this wasn't significant in terms of demand, but at least we saw that that change happen. Another thing I think the government also tried to do in this period was there was supposed to be a tariff increase to enable the tariff on power be more market conscious and to make it more market conscious. There was a planned tariff increase in April 1st, which was supposed to take effect from April 1st, but the government also came out to shelve this until June to sort of provide some relief to all of us in terms of power and ensure that at least we weren't having a double whammy where we had we were paying higher costs for power and then also going through the COVID-19. I guess one of the things I would say was the main impact would be the renewables, the off-grid sector. They experienced some constraints, obviously from the global supply chain. A huge part of their imports is done from China, and because China was also experiencing their own challenges, we weren't able to see a lot of goods coming into the country, as it were. But a lot of these companies as well had built-in buffers and in anticipation. Probably, and I believe one of the things that I would suggest to my clients going forward in this space is to increase their buffer stock over the next couple of years, so that you're mindful and you're not, if we have such a challenge again come, then we know that at least they're covered for a period. So those are some of the things we saw in the power sector. Just to give a few examples, logistics was also, in terms of the value chain, the shipping and the port operations were not stopped because the government felt that was essential. And one of the things the federal government said was that any ships that had berthed or were in port side within in less over a 2-week period, then they would be allowed to discharge their cargo, while those who had been less than 2 weeks were made to wait. And this was also to ensure that we were not importing any more of the virus through such channels. So there was a flow of essential goods at the port, no exemption, and some exemptions to those that were classified as non-essential. Some support also came from the shipping companies themselves, who decided to also support some of their big clients with storage facilities within this the port to also alleviate some of their problems. And the National Shipping Council also appealed to some of the companies to support the value chain with suspension of demurrage costs across this period, so that you also don't have too much impact on the companies being able to get their goods at the end of the lockdown. However, obviously there were some challenges in terms of non-availability of the support auxiliary, i.e. customs were not at work, the immigrations were not at work, so there were some delays. However, we still saw that a bit of this, although hampered, one of the good things we saw was a lot of the companies now looking to implement digital solutions in terms of their payments and collections. Hitherto, before this, it was here a bit acceptable, but not the norm. But now I think going forward, we're going to see a lot more companies take to digitization, like Nnenna had mentioned, because these are unprecedented times, and we needed to just pick up and make sure that we were able to continue to, they were able to continue to execute on their business while things were shut down. Obviously, the package delivery operators, such as the ones who move goods inland, were the more disrupted because there was interstate and intrastate lockdown. And there were huge constraints in moving goods across. People weren't able to get the trucks out of the port because of these obvious measures that the government had taken. But I think one of the things that I want to highlight that came out of this was the surge in the amount of smaller SME delivery companies coming to take up a bit of that stress. And we saw this happen across. I believe everybody here would have gotten a delivery at some point in time. And you saw, so in the challenge we face, you saw something come out of this with the smaller, medium enterprises building up scale in terms of their own business. And I believe this is something that's going to continue to happen. Just to touch a bit on the other two sectors, I'll talk about the construction and companies. Obviously, there were value chain disruptions coming from a shortage in their ability to bring in their materials. Because of the bans and across countries, also some level of skilled workers weren't able to see a few of those come through, specialized skilled workers for certain aspects of construction. So in the first phase, there were a few projects that were still ongoing. You would notice that some of the state projects still went on ahead. I also want to draw attention to the fact that it was just Lagos, Abuja, and Ogun State that were largely impacted with full lockdown, but all the other 33 states in the country were working. So you saw some of the construction still ongoing in those states. But however, as we see a gradual shift in terms of the uptick in the virus, you notice we also got feedback that a few of those across the countries, and as other states started to implement several lockdown initiatives and curfews, we started to see that those ones too were shutting down, as it were. I believe one of the things that also would have affected a lot of the companies, because the financial institutions were also not fully fully operational, you saw the demand for working capital would also have been impacted. And then, at some point in time, they obviously took the initiative to also shut down their operations because there wasn't much they could do going forward. In terms of cement, like I mentioned before, most of the cement manufacturers, I believe there are three key players. A few of their plants outside of Lagos and Ogun State and Abuja. So those remained operational, while those within the states that were under full lockdown had to shut down for some time. However, there was movement of goods across the other states that had the ability to move their goods across. But though this happened, obviously the key drivers for these businesses in terms of their production came from those states that were shut down. So you had some sort of a challenge with getting the products out across those states and across state lines, as we said before. And because of this, there was a slight uptick in the price of cement due to the distributors not having enough and the demand going higher. Obviously, the powers of demand and supply playing here. Well, however, we believe post the lockdown phase, which has now been eased, and when production starts, we think that there might be, or I believe we've also gotten feedback from clients that there might be some level of there might be some level of overstock because productions will start, but there's still partial lockdown. So getting those goods across to where they require might still be a problem. And obviously, because the construction companies are also not working as at the peak as they should be, there's no demand for the cement, and then we expect that the price will go down subsequently. I believe those are some of the things we've seen in terms of what we've observed and what our clients have been able to provide us in feedback from the lockdown period.
Wow, thank you very much, Folake. You got your hands full, you and your team. Yes. And in terms of the engagement, let's talk about the port. So 2 things. One is, I know, there were some bottlenecks before the COVID event happened. Have you seen, at least from feedback from the clients, have we seen that backlog improving, or has it gotten worse? So that's the first kind of thought. And then secondly, are we supporting any of these customers to try to create, go and set up other ports operations around the country, and how can we help, or how have we helped them in terms of elevating this pressure?
Okay, thanks, Olu. I guess that question was going to come. So in terms of, I believe everybody is aware, we have just, I think, 2 major ports. I'll talk about Lagos and Port Harcourt, and a few in Warri and the likes. But the major ports and a significant port for Nigeria, most of the goods coming through Lagos. Now, the experience of the past was largely because of the congestion and the infrastructure leading outside of the ports. In last year, I know, and you would have seen it in a lot of our financials, our client financials, where cost of actually getting their goods from the ports outside was almost twice the cost, because the logistics companies also had to increase prices because of the difficulties. But we will commend the state government as well as several of the regulators and in that industry. The Nigerian Ports Authority, Lagos State Government played a very significant part in trying to decongest the port and ensure that goods, the smooth flow of goods was more seamless. In recent financials, we also observed that in some of our client financials, the haulage costs in Q1 had come down significantly because of these efforts. However, obviously, I mean, Nigeria being an largely import-dependent country. Last year, 2019, circa $47 billion in imports was done across Nigeria, which is huge, and 50% of that came from largely China. So you can imagine the sheer force of how much we'll have to contend with. So grappling, obviously there was a slowdown then there was an uptick because of smoothing the passage. But then grappling with the issues of the pandemic and the ships coming to port, not as much as in the initial, but now that China is up and running, we should expect to see a bit more in terms of the logistics increase and shipment coming through. We might start to see a huge we might start to see some form of congestion again at the ports. We would also expect that the authorities are watching and they would put in place several initiatives to try and get that supply chain going out again. This has also a lot of this has also led to warehouse and storage capacities being full, because the ports have so much to contend with, and you can imagine that this has we're not at 100% capacity. We're probably at 40% or less than 50%. So once the world starts to operate again and you have more shipments coming in, I mentioned 47 billion in terms of imports. You can imagine what's going to happen again. So we are hopeful that the government will take the initiative. There is some level of infrastructure development coming out of the port. You also have various clients, and I'm responding to the question you asked earlier regarding supporting initiatives to develop ports. Yes, we have quite a number of clients looking at setting up dry ports, and have actually gotten approvals done to set up dry ports outside of Lagos. You also have the fact that a lot of the rail projects that are also meant to facilitate the extraction of these goods to the dry ports, and then from there you have easy access to the rest of the country, particularly in states like Ogun State and Oyo State, who are close enough to Lagos for the distance not to be so significant. And then obviously the Lagos-Ibadan Expressway is also under construction. So in a couple of years, I dare say that we should see a lot of easing in the flow of transportation around the logistics that surround the port, and we should see some level of decongestion coming through. We're not there yet, but it's work in progress.
So, Folake, I know you've dragged me into some calls with the CEOs to discuss kind of post-COVID. What are we hearing from clients, and what are they asking us? Funding, advisory. What are you share with our audience? What are we having? What kind of conversations are we having?
So, like I said, the sectors are a mixed bag. I talked about the past sector being a key and essential sector. Funny enough, in the past couple of weeks, I think we've had more requests coming through from the power sector than we've seen in any other sector. And I would also sort of liken this to, or attach it to the fact that there's this expectation of cost reflective tariff coming up in the next couple of months. So the expectation is that once the tariff goes up, it gives the distribution companies more earning power. And this is, I believe, in anticipation. We're seeing a lot in the off-grid space. There's been a lot of effort by the government and the Ministry of Power to decentralize power from the grid and ensure that power goes out and trickles down to the places or the grassroots where it needs to be. And the only way to be able to do this is to support several initiatives in the off-grid space where they are independent of the grid and can actually support power in catchment areas. You would also have heard of the disco franchising, which is one of the initiatives that the government had put in place, which is coming to fore. And quite a number of clients we've seen are very interested in taking this up, because what it does is removes a lot of pressure from the discos and allows independents to come and support and also provide a more efficient system for power distribution and collection, which would also ultimately filter into boosting the sector. And then we might see a bit more in terms of investments in that sector and it opening up. Because if that doesn't happen, then we would not see much in terms of investments into the sector. A lot of the clients across my industries have looked to us, especially particularly regarding the liquidity challenges, like Nnenna also mentioned. We've seen a lot of clients coming to us to say, we have funds, we have loans, we have equity. We need to ensure that we're able to maintain or at least sustain this funding, and we don't want to be on the back foot when there are any changes or challenges. So we've seen a lot of requests for non-deliverable forwards, the OTC non-deliverable forwards, FMDQ. We've seen a lot of clients looking for short-term bridging facilities pending when the economy and the world economy goes back in, and maybe some of their offshore parents or promoters are able to bring in funds to support them. So that's really what we've seen. I think one of the things we've tried to do at the beginning was also push clients towards digitizing their payments and collections, which has been very critical. Previously, we saw some, well, not the effort wasn't as welcome, but now we actually find clients saying, I need to understand how best to move to a more digital space. I need to understand how best to implement business continuity management in my business, because at the end of the day, we don't want to be caught unawares, and this could happen anytime. We don't know if there'll be a second wave, but we pray that this doesn't happen, or we pray that the virus or the pandemic doesn't extend more than this year, so that business can continue. But if that doesn't happen, or if the worst happens, then we know that the clients are requesting to put in place several initiatives to ensure that they're able to continue as a going concern post these challenges.
So I know that thanks Folake. I know we've had a series of conversations around funding, and I know that you've brought some deals for me to sign off on, and what we take to credit committee. In terms of the capital structure of these clients, how have we seen that evolve? Where we've gone from? Have we seen companies from working capital to balance sheet to capital markets, debt capital? Are we seeing any of these now happening in terms of some clients, and which subsectors are you witnessing that in? And should we be looking at more of that post-COVID season?
So thanks, Olu. I believe, like Nnenna had mentioned, you're seeing a lot of changes in the way our clients are beginning to respond to businesses. It depends on the sector. In some sectors, yes, you're seeing a bit of a shift from the normal working capital. Some in the construction sector are looking to do more of the equity in the business rather than just the working capital. We're seeing some changes in some certain construction segments. We're seeing more requirements in terms of the in the power sector, like I said, setting up power plants and then looking to us to provide more term capital. You're seeing some level of, and I think maybe largely opportunistic, with the interest rate regime being where it is and the rates being very low. Some clients are tapping into the debt capital market to raise equity, to raise debt, to be able to support their business, and taking advantage of the low pricing that is in operation right now. We've seen quite a number of that come through. We've seen several requests for CP programs, short term. We've seen longer term for bonds, etc. So it's a mixed bag in terms of who, if depending on the sector, what you anticipate. One of the things we've also seen recently, and I believe that's largely in the Chinese space and the construction space, is clients coming to us to look for term facility to support, to bridge the expectation that there will be delays in their payments coming through over the next couple of months. Obviously, the government has revised its capital expenditure spend, owing to the fact that the budget revenues have been revised downward by about 40%. We expect that to also dovetail into capital expenditure. With all the constraints that are happening, construction sector, we're seeing that a lot of clients were unable to get their promoters to carry out the milestone reviews that should have been done, and payments would have come through from milestone payments. So obviously, we know that this might continue onwards, because the government is also going to try and prioritize where it applies these funds. So a lot of them are saying, look, I want to protect myself. I want to continue. However, I know that I might find it might be a longer way off to get my payments done. So I need a bridge. Or maybe 6 months to 1 year, or a revolving facility to be able to take at the time I need it. And once payments come through, we're able to liquidate them. But obviously, the type of clients are also clients that we expect that we are able to take a risk on as a bank.
So I can see you guys are pretty busy in the P&I sector. How is and the team? So how is the team coping with the influx of requests? I can see there is a number of funding requirements. One of my favorite, optimal capital structure. Looking at those capital structure requirements of the clients, I know that I've preached that for a while, and now you guys are making use of it. You're looking at digitization. You're looking at the ecosystem in terms of banking the ecosystem of the client. How is the team, and how are we adapting to deliver the bank to these our clients?
Olu, I'm very happy you asked that question, because I'm sure you're laughing when you say that, because I've mentioned a couple of times that sometimes I actually think working at work is better than working from home, because there seems to be so much, and because we're unable to have the facilities that are available to us sitting at your desk or within the confines of the office, you're finding that you're touching base with so many people. We underestimate the power of one-on-one, face-to-face contact, and not being able to see people. You sort of tend to do or apply a bit more, and we've seen that the team is working non-stop. We're having conversations with clients on a daily basis. You would think that clients would say, oh, there's a lockdown or a shutdown, we're resting on. No, they want to know what's going on every day. The clients want to know, well, how do you see the market? What's happening tomorrow? How can I best protect myself? And some of the things we've been able to talk to our clients about, and actions that we believe they should take. And I would like to mention a few here is, post this pandemic, it's very important that we encourage our clients to look at their contractual obligations, both off-takers and contractual rights and obligations. I mean, there might be clauses there that you could take advantage of. We might see force majeure being taken up on some of these contracts. There might be material adverse changes, and we encourage clients to look at this and go back and sit at the drawing board with your partners and look through your contracts and see if there are any ways to ensure that you continue to sustain your business, so that the pandemic doesn't have to adversely affect you in terms of coming out of it and what the contract says. I've mentioned business update, business continuity and processes. We've spelled that, we've sang it. Continue to look at how do you take your business offline if there is a need to. What do you need to implement? It is so important. It is so important, as we've all seen. We've also told clients, plan for delays in your raw material procurement. Like I mentioned, a lot of our raw materials for clients comes from China. We're going to see delays there. Even China is ramping up, but it will take some time. So we want to see clients putting that into their plans in the future and giving more in terms of a buffer. If you were doing 3 months, do 6 months, so that at any point in time, you know that at least you're covered to a reasonable extent. Preservation of your customer loyalty and brand value. We've seen in the consumer sector, some things have changed. A few of the big consumer names are doing door-to-door delivery. I would never have believed that was possible, but I mean, that's happening now, and business is changing. The landscape is changing. We'll also suggest that, there's various stimulus packages available that the CBN has provided. I think it's important for clients to also think about them and look to how to tap into this to help your business to get back on its feet. Supply disruption by border closures, trade barriers. How do you want to attack that? How do you want to ensure that this doesn't negatively impact your prices? And if it does, what is the response you're going to give once things open up? How can we continue to leverage on technology to gain operational leverage above all else? I think those are the key things we have spoken to our clients about, and I think it's important for us to also share on this webinar. Thanks, Olu.
Very good. Well done, Folake. Nnenna was with us just now, and I think she's still on. Nnenna, are you still on? I'm not sure if Nnenna is on yet, but very well done.
She's on.
Taiwo. Nnenna,
Hi,
thanks very much for... thanks, everyone, and well done to you and the team. I see a lot of activity. I'm pulled into hours of calls. We're going to be probably on one in another hour or so. Taiwo, that is client coverage for you. It's about the client, it's about focusing on the customer, understanding their pain points, and then coming up with ideas and solutions. These ladies are not going to let me rest. I get calls, chats, follow-ups. So yeah, it's good. We have fun, as you can see. And as you probably have thought, power and infrastructure is not so exciting, but you can see there is a lot going on. Next, on Wednesday, we're going to be having another 2 sets of ladies, actually, in oil and gas, Joyce and Mobolaji, to talk on TMT, telecom, media, and technology. And they will tell us more around what their clients have been saying and how have we been supporting them. But thanks very much, Nnenna and Folake. Well done.
Thanks, Olu. You're most welcome. And thanks everyone.
Olu. Thank you.
All right. Take care.
Thanks, Olu. Thanks, thanks, Nnenna. Thanks, Folake. It was really insightful. We had quite a number of people log on, and some people were actually making comments and saying, oh, thanks for this. I mean, I think the general gist is that there's a broader perspective, and what happens in your industry or as pertains to your close customers is probably what is happening across the entire industry. And so these insights are quite useful. And power and infrastructure should never be, because they're like the bedrock of any power. If there's no power like we suffer here, a lot of things just go wrong. I won't rehash anything again, just to say that please, we have another session. Olu has some interesting sectors to cover again on Wednesday, like you mentioned, and then again, I think at the end of the week on Friday. So please tune in once again. We'll reach out to you to let you have the details so you can register to be a part of this as well. This has been an edition of Blue Talks for today, the 4th of May, 2020. Until next time, stay safe. Bye-bye.